Hey everyone, and welcome back to Everything Tesla Stock. Tesla's going to be the next Apple. Believe it or not, Cathie Wood, the CEO of Ark Invest and a leading voice in the world of stock investment, believes this. In this exciting video interview, Cathie Wood discusses why she believes Tesla will be the next Apple after their recent stock split, and what that means for investors. Today we're going to talk about Cathie Wood and her recent prediction that Tesla will be the next Apple after the company's 2022 3-to-1 split. Now, before you go thinking that this is just a usual stock analysis, we can all agree that Cathie is one of the most successful investors in the world, and her predictions have always come true so far. So, if you're interested in what she has to say, then stick around until the end to find out. Let's hear what she has to say then. But before we start, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything happening with Tesla. Cathie Wood is the CEO and Chief Investment Officer of Ark Invest, a St. Petersburg, Florida-based investment management firm that runs a series of actively managed exchange-traded funds. Wood rose through the Wall Street ranks, starting out as a stock analysis at asset management firm Jennison Associates, and eventually became Chief Investment Officer at AllianceBernstein. The 66-year-old celebrity investor has amassed millions of devoted social media followers thanks to her compelling message, which she frequently expresses in YouTube videos and tweets, that significant technology advancements are reshaping the world, including the incredibly huge bombshell she recently dropped about Tesla being the next Apple after the 3-to-1 split. In a 5-part Real Vision interview, Cathie Wood stated that new technologies would reshape entire industries, and predicted Tesla would follow Apple in capturing the majority of its sector's profits. She also discussed why traditional finance professionals don't understand Bitcoin and other cryptocurrencies. Wood stated, Apple misunderstood that a cell phone was really a computer. Wood stated, Apple understood that a cell phone was really a computer well before Nokia, Ericsson, and Motorola did. It designed its own chip because Intel and Qualcomm, they were going with the volume players, and Apple was nowhere, right? By designing its own chip, it now still has the lion's share of the profits in the cell phone market. Even though its shares have gone down, its value has gone up. We think that's what's going to happen to Tesla. They're better performing cars. They delight the consumer. That's how Apple won. This is how Tesla is going to win, she added, implying that Tesla's vehicles will outperform its competition due to their high quality and performance. These technologies needed 15, 20, 25 years of gestation before they were ready to hit prime time. Anyone running that kind of strategy back then that we at Ark are running right now, they were cheered on. It was hallelujah. The brave new world. Rah rah rah, everybody chasing and trying to one-up one another, right? Today we're considered such an odd duck, Wood stated. Wood, CEO of Ark Investment Management and a manager of a number of investment and innovation-focused exchange-traded funds, is one of Wall Street's biggest Tesla supporters. Tesla stock is one of the most valuable investments in the Ark Autonomous Technology and Robotics ETF, the second most valuable trading in the Ark Innovation ETF, and the fourth most valuable holding in the Ark Next Generation Internet ETF. The funds collectively hold almost 1.3 million Tesla shares, worth $911 million at the recent pricing. This stake has fallen from a high of about 5.6 million shares due to the overall tech sell-off, promoting Wood to cash in some earlier profits. However, as a result of Tesla's recent stock split, Ark now holds millions of more shares. When a firm has rapid development, its stock price might skyrocket, making it appear pricey to individual investors with smaller investment amounts. Early in August, a single share of Tesla cost about $656. Thus, the business recommended a 3-for-1 split, which has now tripled the number of shares in circulation by 3 and organically reduced its share price by 2/3 to roughly $218.67. Current stockholders, such as Wood's Ark funds, received 3 shares at the lower price for each one they held before the stock split. The overall value of their ownership will stay unchanged. In essence, stock splits are just cosmetic and add no intrinsic value to the underlying company. And while the 3-to-1 Tesla stock split contributed little value, Cathie Wood believes Tesla's operational success does. And with over 1 million deliveries in the previous 12 months, the firm is the world's largest seller of electric vehicles. And it has even received praises from the CEO of main competitor Volkswagen Group for its extremely productive manufacturing techniques to outperform the rest of the industry. Tesla boasts an automotive gross profit margin that overshadows other car makers in the automotive industry, and the first quarter of 2022, for example, showed its profit more than double that of its competitor, Ford Motor Company. The amount could even become higher as Tesla continues to ramp up manufacturing, with new gigafactories opening in Texas and Germany. A high gross profit margin, all else being equal, results in more money pouring through to the bottom line in the form of earnings per share. Earnings are just the company's net income divided by the number of outstanding shares. And at Tesla, the metric increased by 633% year over year in Q1 2022. Despite the latest tech sell-off, which has driven Tesla stock down about 47% from its all-time high, Cathie Wood remains as bullish on the long term as ever. Tesla does face near-term problems related to supply chain issues and worse economic conditions, which may affect demand for large purchases such as vehicles. However, Ark updated its Tesla modeling in April and disclosed a price estimate of $4,600 per share by 2026, or $1,533.33 per share following the stock split, representing a 560% increase from where Tesla stock currently trades. In addition, Ark offers an extreme bull case scenario in which Tesla stock might increase by 732% to $5,800, $1,933.33 post-split. This assumes the firm sells 17 million cars in 2026, and the revenue from Tesla's planned self-driving robo-taxis is significant. These are going to go into production in 2024. Even Ark's pessimistic case of $2,900 per share, $966.66 post-split, is compelling, and that implies a 316% growth from the present rate. While some of these numbers may make your head spin, it's worth noting that Tesla has produced a return of more than 18,000% since going public in 2010. In other words, if you invested $10,000 back then, it's going to be worth more than $1.8 million today if you hung on. In 2018, Cathie Wood made a bullish call on Tesla Inc., setting a price objective that was well beyond that of analysis at the time. That aggressive price forecast was met less than 3 years later, cementing Wood's place in investment history. If we're right, this stock in our models will go to $4,000, Wood said on CNBC. Our best case scenario is $600 if we're wrong, and all they do is electric. At the time, Wood's forecasts sounded far-fetched, with the highest price target from analysis sitting at $500 and shares of the electric vehicle startup trading at $346. The future will be electric. Transportation as a service and software as a service are the wave of the future. This is Tesla's direction. Tesla shares were divided 5-for-1 in August 2020, making Wood's price goal for Tesla a split-adjusted $800 per share. Wood's prediction came true in January 2021, when Tesla passed that $800 mark. Wood had since doubled down, predicting that Tesla shares would reach a split-adjusted price of $1,400 in 2024 and $3,000 by 2025. Tesla shares reached an all-time high of $1,243.39 in November 2021. Investing $1,000 in Tesla, Wood's prediction that Tesla will reach $4,000 per share was way ahead of analysis at the time. Those investors who considered her bullish call and confidence as grounds to invest were rewarded with the achievement of the milestone. Based on the peak price of $346 on February 7, 2018, a $1,000 investment in Tesla could have purchased 2.89 shares of Tesla. After the 5-for-1 stock split, the 2.89 shares would then become 14.45 shares. Based on Tesla's current price, this amount of shares is going to be worth a lot of money today. The investment would be up 1,109%, or a 277.3% annual gain over the 4 years since Wood's price forecast was disclosed. Those who were fortunate enough to acquire Tesla shares based on Wood's price goal statement and then timed an exit near all-time highs in November would have done even better. A $1,000 investment made based on Wood's price target estimate and sold at all-time highs would have yielded $17,968.43. A 1,697% gain. What are your predictions? Let us know down below, and thank you for watching. And while you're still here, go ahead and click on one of these 2 videos on your screen. See you there.